race for the White House officially on. President Trump formally accepting the Republican nomination last night, vowing to unite the country in a second term.
In a new term as president, we will again build the greatest economy in history. We will defend America against all threats and protect America against all dangers. We will lead America into new frontiers of Joe Biden may claim he is an ally of the light, but when it comes to his agenda, Biden wants to keep us completely in the dark.
Joining me right now, Continental Resources Executive Chairman Harold Hamm. Harold, it is great to have you this morning. Thanks so much for being here. Your reaction to what you heard this week and the impact, for example, on the energy industry. Let's start there, which is, of course, what you do. Did you get anything in terms of what you might see differently in your business?
Well,
should the president get a second term?
Yes, the president should get a second term. You know, the president intervened back when the Saudis and Russians were basically fighting and causing the bottom to fall out of the market on oil, and he intervened and brought stability, and that's what we have. You know, prices are low due to demand being low right now, but it is stable. So people are putting their mind back to work and what is to come in the future. We have an abundance of oil and gas in this country, and as a result, consumer prices are low, and everybody's getting a break. You got less than $2 gasoline for much of the country, and natural gas is in abundance. We've cleaned up the air in this country, and we have the cleanest air in the world and in America today. So I feel good about where we're at. Energy independence has meant so much to America. He's got a free hand to work, as we've seen, in the Middle East, and bring stability in the Middle East as well.
And he has told me that he wants to continue the deregulation. Perhaps we'll see more deregulation in the energy space. You know, Harold, I want to get your take on that, but I also want you to look at this market here. We're talking about 135 record highs under Trump for the S&P 500. And I keep saying this. I feel like this is the elephant in the room. I don't think the market would be trading where it is today. And again, rallying this morning up another 155 points if the market thought that we were going to see a change in policy. In my view, part of this gain for the markets has to do with investors believing policies will not change. Tax cuts, deregulation will be in place, that President Trump will win. Do you disagree with that? Because a lot of people like to come up with different reasons for why the market is trading higher. In my view, it's because Wall Street right now, it could change, but right now is betting on a Trump presidency and the policy that he's put in place continuing.
Well, it is. You know, the biggest thing that's happened, you know, is the reversal of Obama policies that's brought the economy back. So that's huge. Energy played a good role in that, in powering the economy back as well. But, you know, Trump's policies have been everything. The tax cut has worked great for all Americans across the entire spectrum, putting people back to work. That's what it's all about. We had lowest unemployment. You know, the most people back in the workplace. Who would have thought those numbers could have been what they were? So, yeah, that's the big news, and I think people are betting that, you know, that Trump will be reelected, and certainly that should be the case.
Yeah, and of course, you also have to attribute the Federal Reserve and this idea that they're going to change their approach to inflation. That will keep these record low interest rates where they are, meaning not a lot of alternative if you're looking for yield. But let me get your take on Laura and the hurricane's path of destruction, Harold. The storm is now a tropical depression, being blamed for at least 6 deaths. What is the Hurricane Laura, Tropical Storm Laura's impact on the energy sector from your standpoint?
Well, it always affects us. Anytime it comes in, you know, all the rigs are shut down in the Gulf and evacuated, and that always happens. The other big impact is refineries. You know, they have to shut those in and make sure that they have no damage there, and so that impacts our industry for a short term. But gas prices up. It was like $2.70 this morning as a result of all the shut-ins in the Gulf of Mexico. So it does impact us, but for as hard hit as those places were, it's a wonder that the death toll wasn't much higher than that.
So when oil prices were falling like a rock last year, there was a lot of worry that the shale industry would be broken. Harold, where are we in that? We saw a number of shale companies unable to handle it. They actually had to either declare bankruptcy, close shop. What's your take on where we are with shale and the industry now with oil at the levels that we're in the $40 range?
Well, we're certainly going to see a restructured industry coming out of this. The companies that are strong, like Continental and a lot of others, are real oil and gas companies. They're going to be much stronger. We're seeing a great improvement in efficiencies again. Every time we slow down like this, we do that, and our company is certainly working on that. And we've seen a great deal of additional efficiencies that we can build in the future going into it. So, but we're seeing a lot of these private equities and all that is going by the wayside. A lot of them are being put together under one management team or another, and in the industry, refer to them as cramcos. Several companies has been crammed together. Others that were weak sisters are just not making it. They're having to file bankruptcy. So anyway, you have to prepare for this. This industry is cyclical. It goes up and down, and you have to prepare for that. Make sure you're not too far out over the skis with debt. And so that's just part of what we do in this industry, and you survive it and you go on to the better times, and that's where we're headed. This industry is stabilizing, and we're heading to better times.
And of course, Harold, one of the most important indicators for the price of oil and really the health of the industry is global demand, right? So, Harold, let me get your take. You're a businessman. You're seeing where we are in terms of this shutdown. You know where we came from. Before COVID, we had a 3.5% unemployment rate in the United States. We had some real euphoria in the United States in terms of the economy. What are your expectations for 2021? Is demand going to come back, Harold?
It is. We're going to survive this in pretty good shape. We're going to survive the COVID-19. What we can't survive is socialism and some of the policies that, we need law and order and must have that in this country. But demand is coming back. We're seeing people dealing with COVID-19 now. They're back getting in airplanes and flying, wearing masks, doing all the things that they know to do to deal with this. We're seeing we're almost back to 50% flights again in the U.S., and so demand is coming back. Refinery utilization is up 82 or 83%. So it's coming back. And you just have to wait for that to happen. People are driving a heck of a lot more than probably have. And so gasoline sales is good. Diesel, of course, is good. And we're seeing that demand restore. So 2021, you mentioned that's going to be a very good year for us, and we're looking forward to that. Continental has a lot of running room. It's got a tremendous inventory, and so companies that's stable like ours are going to do very well.
Well, we will follow the growth story of Continental as we always do, Harold. It's great to see you this morning. Obviously, we are all learning and adapting how to live with this, because this is going to be with us, and we are being forced to adapt. So we will hopefully see that demand come back, as you say. Harold, it's good to see you this morning. Thank you, sir.